Today, we're going to be talking all about electricity. Very pleased to be joined by Imane Bakkar, founder and managing director of Logarisk. Imane, welcome to Monetary Matters.
Hi, Jack, and thanks a lot for having me.
Really glad you're here. So, Imane, you've held roles in risk management at large investment banks, at large central banks. Now you've got your own firm. Congratulations on that. Electricity prices in the US are going up, and a lot of people are attributing it to artificial intelligence, and in particular, the data centers that are powering artificial intelligence. Just could you give us a rough overview of the supply and demand balance, or maybe imbalance, that you see in the United States, and then we can go to Europe and the entire world.
I'm going to give it like a big picture, which is very true for the US, but also globally. In the past 2 decades, we have seen two things happen. And this has accelerated a lot recently, which is on one hand, and that's the supply side, the grid, the power grid nature has changed. So we have seen a lot of new types of energy generation come into the power grid. And that's in particular renewables, solar, wind, but also new technology which is still nascent, such as battery storage. And I say nascent, but in some states of the US, is actually starting to become a big component of the power grid. So that's on one hand. And on the other hand, this time on the demand side, the thing that has happened is that there is a new type of demand that emerged through artificial intelligence. And as you said, data centers, but also EV, crypto, Bitcoin mining takes a lot of energy, as well as what I call the general electrification and electronification of our services. And because of that, we have like two fundamental changes in the supply and the demand side. So, going back to your question around the University of Manchester here in the UK, did some analysis around AI models and what they introduce in the power grid in terms of new behavior. And they found that AI could introduce instability on the power grid by inducing sometimes spikes in demand. And the difference here is, your demand and my demand are relatively easy to predict, right? When it's dark, we need to light. When we're cold, we need heating. When it's hot, we need cooling, right? But algorithms, what they found in this research is not very clear how they decide when and where and how to ramp up their training or application, which could cause spikes in the power grid. So that's one of the research that I could cite. And there is other research, I think it was reported on Bloomberg, that AI demand and data center demand can change the frequency of the signal of power. So again, this is like circumstantial evidence, but all I can say is that to your question, yes, AI demand creates a new component and risk factor in the power grid, but it's not the only one.
Thank you. So I believe it's the case that for a while, electricity demand in the United States was actually flat for a while, and maybe even flat to down. I think the reason is because we got a lot more efficient, so things require us electricity. Correct me if I'm wrong. So now on the demand side, we have two new things. We have increased demand from electrification and electronification, and then we also have artificial intelligence demanding a lot of electricity from data centers, and that by itself increases demand. What you're saying, I think, is also that the timing of the demand is very hard to predict. So, human beings, if they're in Florida, they're going to require a lot of cooling in the summer. People in Maine are going to require a lot of heating in the winter. That stuff is quite easy to predict. But algorithms, you don't know. There could be a huge surge in demand at 3 in the morning for some reason, and you have no idea. That's what you're saying.
That's at least what some research seems to be saying, yes. So obviously, AI is part of this. But another smaller, but still interesting element of it that I was reading just today is crypto. In power, there is this term called forecasting error. Forecasting error means how well I can forecast tomorrow's power demand and tomorrow's power supply. right? In crypto, there is this term called crypto curtailment. Crypto curtailment is where Bitcoin miners and other cryptocurrencies miners decide to curtail their mining depending on the power grid conditions. I was reading today that in Texas, there was some analysis that shows that crypto curtailment actually impacts a lot that forecasting error, which means that crypto also, in some cases, an impact. So yes, AI is possibly the biggest change in demand. We also have other elements in the change of demand. And then also there is the supply side that I was mentioning, which is in some places in the US, there is also renewable capacity that came on the supply side. So it is not an easy equation as to is what's driving all of this, but it's definitely a big component of it.
And what are some conclusions you're drawing about maybe electricity prices or maybe the volatility of electricity going forward?
One of the things to draw is that it's possible for electricity to become more volatile. Uh, and then in terms of prices, it's more difficult to say because it all depends how power grids, whether in the US they're managed by region. The grid in the US is sliced into different regions. For example, I believe you are in New York, so that's the PJM grid, which is I think the biggest and the most mature in the world, ERCOT in Texas and SoCal in California and so on. So it depends how each grid is going to manage and optimize given new features. I will give actually another examples in Europe where you see countries like Germany or the UK, where I am right now. I'm based in London. Our supply is now over 50% from renewables. So technically you would assume that because our supply is 50% from renewables, the prices should be very, very low. But again, that has not translated that way because it all depends how power grid is optimizing, how wholesale markets are behaving. Because before the price gets to you and me, there are wholesale markets. So it's not easy to draw a conclusion either way.
Except on volatility. You think that it could be a
Except
lot more
volatility, which I think it could be, we could see episodes of more volatility.
on the renewable supply? So in the UK, where in London 50% is renewables, in the US it's less, but renewables have been growing. Talk to the consequences of that on the variability.
Sure. So for renewables, just to give you some numbers first, and sorry, because obviously my numbers might not apply to the latest numbers, but it gives you like a range. So I think in the US, if you take the whole country, is between 20 and 30%, the share of renewables. But then if you zoom in into some states like California, I believe Vermont, that percentage becomes much higher. And another example, which is Texas, I believe the percentage there is also higher, like 30% or more, if I remember correctly. So, and then as I said, all of Germany, Spain, and UK is more than 50%. So, what that means is that now you take the power grid, which was mainly based on fossil fuel. So fossil fuel means you have the gas, but it's mostly gas, or the coal, you burn it, you get the power. So your risk as a power grid is, do you have the gas and the coal that you need to burn? And the risk tended to be mostly geopolitical risk of where to source that gas and coal. And then also logistical risk because you need to ship them, store them, and so on. And in France, I will give the example of France, and it's true for some of the US. There's also uranium as well.
Mhm.
And again, all the associated geopolitical and logistical risks about it. So that's how you view the grid. Now, you look at a power grid which has a good percentage from renewables, and then one of your biggest risks becomes weather. It becomes, how is it going to be sunny? Is it going to be windy? Because depending on that, the grid might be totally oversupplied or actually a lot undersupplied. And then it becomes, we saw things that now became very standards, but like 10 years ago, we were like, people who were on the commodities markets were like, wow, what's going on? Which is where wholesale market price during the day became negative, which is very bizarre for a commodity because, you would say commodity should be at least the production cost price. That's the floor. But because we had renewables coming into the grid, there were more and more occurrences of short-term wholesale power market having negative prices. But now, in the grids which have a lot of renewable, it's actually now integrated that it's something that can happen, and that means that you have to pay to someone to offload your power somewhere. um, but the dependency to in the system increases is what is happening.
And so do you still see now negative prices of power every now and then during the day?
It is possible, yes. Mostly in Europe. I can't give you a concrete example in the US, but in Europe, it does happen during the day when there is a lot of wind or a lot of solar and a lot of production. Sometimes the demand stays the same, and that still happens if it coincides with a mild day where people are not using neither cooling or heating. That can contribute as well. But what that means is that weather becomes very important because weather has always been important for energy. There is a statistic I will give you that if there are any commodities listeners, they will know what it is. It's HDD and CDD. It means is heating days and cooling days. This is a statistic number that is very important in energy markets because it's an indicator of demand. But now it's not only HDD and CDD, so cooling and heating is like sunny, cloudy, windy, becomes super important.
And so earlier we talked about volatility. The volatility, or I guess the variance of supply of green energy supply intraday is very, very dependent because it can be extremely windy from 2 p.m. to 3 p.m. and then not be windy at all later on in the day. It can be extremely sunny. It can be extremely cloudy, in which case there's no energy. So that does lead to more intraday swings. Is that a big issue, or are you saying that issue has been solved?
No, I'm definitely not saying the issue has been solved. You are right. This can cause big swings, but let's now decompose because not all renewables are equal, and not all dependencies to equal. So let's start with hydro to get it out of the way. Hydro, if it rains a lot, the dams are full, etc., pretty stable. Then you're left with wind and solar. Solar, so starting from the most stable to the least stable. Solar, worst case, at night there is no sun. So at least part of the day is you can predict, right?
Yeah, and if there
Uh,
is sun during night, then we have a problem.
we have other problems that we have to worry about. Generally, if there is any solar peak during the day, it's going to be around midday. So it's not as predictable, but it's more predictable than the last one, which is wind. The elements of solar that could cause swings is clouds, reflectivity, humidity, things like that. Depending on the technology you use to generate solar, might have impact how much energy that renewable plant can produce. Wind, which is the last one, the least predictable. Wind depends on many parameters that I'm not a climate scientist or weather scientist, so I'm not gonna risk going into the details. But wind can pick up at any point of the day, and it's very difficult to predict. You could see a lot of swings. The other thing, and just to link it a little bit to now cash flows and valuation that can happen with wind, is if you are in an area where there is a lot of wind power, then it is likely that when your renewable assets start producing a lot because there is wind, all of the other wind farms are also starting to produce a lot because there is wind, and that could pressure price. Which means that if you are invested into that renewable asset, or if you're the private equity owner of it, whatever, then wind prediction becomes very important for you in terms of knowing what your cash flows are going to look like, because the value of your wind farm at the end is how much it gets paid for the power it's producing. So absolutely, by this order of renewables, there are others. Watch like hydro, solar, and wind. There could be swings. They're going to be different depending on the composition of the grid. And again, that volatility needs very sophisticated model to capture.
So what we've always had is where weather swings can fuel wild changes in the price of commodities, in terms of grains, in terms of other agricultural commodities. That's always been true for for thousands of years, probably. But now literally the inputs into a lot of the agriculture themselves are dependent on weather. Like it used to be, natural gas, oil, and coal. It doesn't matter if it was rainy or sunny or windy or no wind at all. You could rely on that to fuel your electricity. Whereas now the inputs themselves are dependent on weather.
So the answer is yes. And I would give you some examples where, I mean, I think the example, like there are many examples I can give in the US, right? But I will give a relatively recent one, which is Storm Uri in Texas. Which was like a horrible storm in terms of like, physical damage and impacting people in their lives. But looking at it under the lens of electricity, it caused like huge spikes in price. The grid had a lot of outages, it couldn't cope. Since then, in Texas, there were some renewables that came in. So there is now an argument, I don't think everyone agrees on it, whether now that there are more renewables, maybe actually it could add more stability. So this time, the argument of renewables adding stability because um, if there is a region which is more impacted than another, then and the shipments of gas or oil, whatever, cannot arrive, maybe another region which is less impacted can still produce power. Now, as I said, not everyone agrees on this rationale, and it's yet to be tested. Um, but yes, definitely, when there are extreme weather events and they do impact electricity prices, I would give you one other example on this part, which is this time I will take you to France, where France has a lot of nuclear electricity, and nuclear electricity needs a lot of water to cool down. So if the water reaches a high temperature, you cannot use it to cool down the nuke, so they have to switch off. And recently, as we've been having drought and quite warm summers in Europe, often you have some nuclear facilities that have to switch off because the water is too warm. So definitely it is now a component there for electricity, as I think what you were saying, in a similar way that it was for agriculture.
Tell me your views on the interconnectedness between weather and the financial system.
I have put out recently like a white paper, which is a very preliminary, but just to put forward some thesis about the interconnectedness of weather and the financial system. And before going further, I just want to be very clear on terminology, on what weather means. So my paper is called Weather is No Small Talk. But actually, when I say weather, I mean the day-to-day change in atmospheric conditions in the short term. So I'm talking about short term here, 1 to 2 year max, and obviously intraday, day to day, week to week.
So weather, not climate.
Weather, not climate. Exactly. So my thesis that I'm making in that paper is that the financial system is getting more interlinked with weather, and that weather, as in forecasts, data, analytics, technology, seems at least to be getting more privatized at the same time that private markets seem to be getting more weather sensitive. And I can go into details what I mean
Please,
by
yeah.
each. So I'll start with the first hand. When I say weather is getting more privatized, what I mean is data collection for weather from satellites, balloons, sensors, as well as the analytics that go to analyze that data is increasingly, or at least it seems increasingly moving more from the public sector to private companies. So, for example, to give you the example of the US, like NASA and the National Oceanographic Atmospheric Aid Administration, the NOAA, the Met Office in the UK, other European, the ES used to collect that data, but increasingly you see startups and new innovative firms that come with also technology and data collection that is becoming more critical into weather forecasting. In the paper, I mentioned one statistic. I think the market size for weather forecasting was expected to grow to like 4 billion in the next few years. Private markets are becoming more sensitive to weather is an observation that But also, I mentioned some research and statistics. Private equity and infrastructure investing invests more and more into infrastructure related to power and electricity, and renewables, which we just discussed, are sensitive to weather. So these are the two components of the equations that I tried to highlight, and as one of the examples of the financial system being interlinked with weather more.
So the tracking of weather, basically, is it going to rain tomorrow? Is it going to rain on Wednesday? Is increasingly owned by private actors, not the government. And what are the significance of that? What are the consequences of that?
So on one hand, you would say that, some of these private actors have come up with innovative technologies, and there is a lot of new ways to collect more and more granular data. On the other hand, there is a view that if weather forecasting becomes completely dominated by private firms, would we have to pay for it? For example, this is like real economy impact, right? But also, it means in terms of sophisticated prediction of weather, what would be the ethical obligations for those actors that are not from the public sector? Again, I'm speaking in hypothetical scenarios here because I don't know if any of this is happening, but hypothetically, say, if you have private entities that trade on weather, for example, that trade power, and they have very sophisticated weather forecasting capabilities, do they have any obligation to the public, for example?
Yeah.
These
If
are the
there's super advanced technology that can tell there's gonna be a hurricane in, a month, if that was owned by the government or at least some agency with some obligation to the public, it would let that be known and people could evacuate. But if it's owned by a very greedy private corporation, they could just try and sell that data or trade off of it instead of trying to help people.
Hypothetically, yes. Now, again, the aim for my paper is just to raise discussion and I think this is something at least policymakers or, researchers and others can chime in into, because we are at the start of it. Obviously, I don't know what is the right answer to this question or whether this hypothetical scenario can ever happen. However, ethically, you might ask yourself that question. There is another view, which is completely different from this, which is that if sophisticated weather forecast becomes more accessible, then there are countries that do not have NASA, that do not have satellites, that may be able to buy those services more cheaply and have better weather forecast. That's the other view there. Um, so again, it's a complex discussion, but all what I'm flagging is based on circumstantial evidence. There are more weather services that are being privatized, and that can lead to hypothetical scenarios which we might ask ourselves about.
Right. So the private ownership of weather data and analytics firms is actually not one of the four essential drivers you talk about that's driving the increased sensitivity between the financial system and the weather. The two of them you've already talked about, the evolution of the power grid to increase renewables and the wider and newer usage of artificial intelligence. So we talked about one and two. The third driver is climate risk. And then the fourth driver is the larger size of non-bank financial institutions, which you referenced earlier when you talked about private equity owning a lot of these renewable power plants. Tell us about that development, why it's significant.
Yeah. So obviously, private markets, just to recap, like it's private equity, private credit, infrastructure, real estate. And obviously, it's a market that is growing. I believe that this year it was one of the main focus markets, I would say. And I think if I refer to an FCA, which is this is a security authority of the UK, I think they mentioned that the size globally of private markets in general is 15 trillion. And private markets themselves are part of it is called non-bank financial institutions, which is any financial player which is not a bank, and which those constitute half of the financial system, right? So it's quite big. Now, if we zoom into the topic we're talking about here, which is electricity and weather, and so it's not easy to find data on exactly this slice, but I found some research that mentioned some statistics. One of them, it was published in the National Bureau of Economic Research. The two authors, they looked at two forms that all the power plants have to fill for the EIA, the governmental agency for energy. And they looked at this form and they assembled this quite large data set. And then from that data set, they calculate that private equity, institutional investor and foreign investor, they own like a big majority of wind, solar, and other renewables, like I think over 50%.
Yeah, so I've got the data here. Private equity, institutional investors, and foreign corporations own 58% of wind plants in the US, 47% of solar, and then 34% of natural gas. And you talk about how basically the old owner of these assets was US power plants that were owned by the US and probably were publicly traded. So, why is it that the wind and solar projects are now on the margin instead of being funded by publicly traded US power plants? They're now owned by private equity. What's driving that?
These numbers are from the research paper that I've referred to. I think they are in concordance with analysis of other private portfolios. So that shift for renewable is not only for renewables. I quote another analysis which shows that PJM, which is the big grid on the Northeast, regard fossil fuel plants, more than half of them, they are also owned by private equity. So the question is, I think this is in line with increased investment in infrastructure from private markets. And this is not only in the US, it's also in other parts of the globe, which is basically when infrastructure needs upgrading, maintaining, or additional investment, the route through which it came from is through asset management, and it took different forms. One of them is private markets. So I think that's the evolution that has happened overall, and the power sector was impacted as well the same. Now, on renewable assets, this is hypothetically speaking because I have not looked into detail. One of the other reasons potentially could be the incentives that were made for renewable energy, could be a factor why the investment has increased. Another might be related to sustainability metrics from portfolios. So these could all be factors that explain why the investment in that sector became more from private markets. But I would say this is in a overall context where NBFI, as we were saying, and asset managers have become bigger investors in infrastructure in general, power being one of them.
And how does the transition of investment in infrastructure from privately owned but publicly traded power plants to now private equity and private funds investing in this infrastructure, how does that affect your risk analysis? Why does it matter that it's private equity funding the wind and solar instead of a publicly traded power plant or a like JP Morgan? Like if a non-bank is making the loan instead of JP Morgan, how does that cause that financial system to become increasingly weather sensitive?
Why I am raising this is because my point is more that private make markets, because of their investments, are becoming more weather sensitive. But managing that sensitivity, modeling it, risk managing it is not obvious. And private markets, by contrast to banking, is less regulated. So therefore, uh, one of the questions one can ask is, okay, so is the risk management done properly, but also basically do they have access to the weather data that they need? Do they have access to the modeling that is needed? Because, for example, if you look at on one part of the spectrum, highly sophisticated hedge funds or algorithmic trading firms that trade into electricity markets, and contrast that, say, with a small grid actor which own one asset, I'm sure that we would find discrepancies in the sophistication. So the reason why what I'm raising is uh, private market is becoming more sensitive to weather, so that's a risk factor that needs to be risk managed too. But also, if there are private actors who own renewable assets, then they need to be able to manage that risk and include it into their valuation, include it into their strategy, and so on, is actually the point. Now, whether if there is a failure, it would cause systemic issues, I haven't looked at that in particular.
So when you say private markets, you're not talking about private versus the government, i.e., public. You're talking about private equity versus publicly traded securities.
I'm talking about private equity firm risk exposure versus, say, a publicly traded
Yeah.
utility that has been in this area for ages.
And talk to me about the just how weather impacts markets. You have in the paper several examples of that.
In terms of markets, I zoomed in on private markets and electricity, but I think initially I looked at the wider financial system and markets. So there are two types of literature on impacts of markets. One which is on market sentiment. So actually there is a big corpus of research on weather impacts on market sentiment, as in if it's sunny, do we take more risks? And if it is cloudy, is there less liquidity? So I think one of the research I quote says that when there is good weather, people feel more bullish. So again, I encourage everyone to read the research and make their own conclusions, research on weather and market sentiment. Now, in terms of impacting the financial system from a stability perspective, there is how weather can impact geopolitical risk, which then translates into bond price, credit spread price, equity price. I give the examples of drought and severe drought that happened in the past that were shown to have increased unrest in some parts of the world, which then caused either government collapse or severe unrest. I give the example of Norway, which actually had elections yesterday and today, I think. And these elections were because the Norwegian government collapsed, because the coalition collapsed earlier this year. And one of the drivers, it's not the only drivers by any means, but one of the drivers was because Norway was producing a lot of power. It became an exporter of power to neighboring countries, especially the south of Norway. Germany had a period where weather-wise there was no wind, so became an exporter, and Norway price was becoming pressured upward, so Norwegians had to pay more for power whilst their production had no issues. So just to give you some elements of geopolitical risk. And then the other examples I give are around making trading decisions. This is where hedge funds, investment bankers, commodity traders have all been seen to hire a lot of weather specialists to use weather forecasts and weather analytics to improve their risk taking and strategic decision making. So a lot of interlinkage there with the financial market.
So I think you're referring to the 2010 drought in Russia, which caused wheat prices to surge, and then we had the Arab Spring, a lot of revolutions across the Middle East. So it definitely can have geopolitical consequences. And then you talked about Norway as well. So, but tell us more. And like, I know there's this literature out there, but I want to hear your thoughts, not just your reference to the literature. Like, tell us why are Citadel and all these large firms, why are they hiring these meteorologists and paying them $1 million? Like, what's the edge? What's the connection?
So in the financial system, you have intermediation actors, which are actors that you are a power utility, you come to and you hedge with them, and they provide you generally a long-term hedge or a loan or a financing, and they could be a bank or a non-bank and so on. And then you have market makers, which are those providing liquidity in the market all the time. And their objective is not to carry positions end of day, but their objective is to provide liquidity during the day and then take opportunities of spreads during the day. Some of the market participants that are trying to optimize the spreads, whether in the power market or the commodities market, but also in the equity market and other areas, could be using weather as a signal, as an additional indicator in their trading. So I will start from trading power intraday, then weather is like your factor number one, to maybe trade in equities in a certain region or a certain sector where weather could be one of your indicators in your quantitative models. So I think that is why. The second reason is that globally, there are many authorities globally and government globally that have put climate objectives for the financial institutions operating into those locations, and therefore, having weather scientists and climate scientists allow for you to model short-term scenarios and long-term scenarios for that in order to abide by those local regulations. So to go back to AI, which we started this conversation and do the loop there, if you look at in the 90s, so I'm a 90s person there, and usually mathematicians studied mathematics in depth and then went to work at universities or as super sophisticated economists at the Fed, or worked with branched into physics and astrophysics and so on. But then in the 90s, most mathematicians went to work in the financial industry because it was the rise of sophisticated mathematical models in the financial system. And I would say we have seen recently the trend of AI and data scientists, engineers. A lot of them are working in the financial industry. And recently, I think is the same trend for weather. All this speaks to, I think, the fact that modeling, the more accurate modeling is, the more information you can get from certain data, the more indicators one can get, is becoming like very valuable, and also valuable because you can apply now very sophisticated models to have as much information as you want in order to inform your trading decision or your risk management decision. So I think that's kind of a general trend we've been observing through many sciences.
And how long has that trend been going on? I'm a huge fan of the book about Enron's Smartest Guys in the Room. I know that there was a move to deregulate energy markets in the 1990s and 2000s. The collapse of Enron, I think, halted that, at least temporarily. What's the status of deregulation in the energy markets? And Kenneth Lay, the guy behind Enron, was just this huge advocate of energy deregulation, so you could just trade everything. Did that ultimately happen?
The commodities market and the energy markets definitely still have some amount of regulation. I would say, did the regulation go as far as they could? I personally don't think so. But would they reduce to the level that some of the proponents of deregulation wanted? I would say no. Because we are now, because of all these evolutions that we discussed in the past hour or so, around the evolution of the power grid, the evolution of the supply, the evolution of the demand, this is a great opportunity to think about your question. Do we have the right amount of regulation to have a sound and robust power grid? Do we have the right amount of regulation to looking at the vulnerabilities around private markets? Maybe the answer will be yes. Maybe the answer would be, maybe this part could be better safeguarded. For commodities, particularly, there are a lot of differences between regulations, say in the US and in Europe, in terms of disclosures, reporting. There are also differences into like how your risk management obligations when you're a small actor, you're a big actor. And I will conclude, because we started with AI, with this interesting snippet I saw, that I think the Alberta in Canada grid regulator has put forward a consultation where they're asking whether data centers should be a consumption, is called in the jargon load, output for power as any other, or should there be grid actors with obligations? So these are, I think, whether there is already a lot or not, we are in a situation where they need to be rethought around the new ecosystem we have right now, that has evolved a lot, and the actors of it has changed as well, supply and demand.
Yeah, and with the huge amount of money that these incredibly well-capitalized companies are throwing at data centers, they're so expensive that the electricity prices is like pennies to them. So if they're going to spend billions and billions of dollars on all these chips and the construction of these data centers, they're not going to bat an eye at the fact that, the price of electricity per kilowatt hour has gone from 13 cents to 19 cents. Now, American citizens are going to be paying attention to that, and that could hurt American citizens and their pocketbooks, definitely. But these companies don't really care at all. And if they see an uptick in productivity of AI that's going to use a lot more electricity, and they do, they're going to be using a lot more electricity. So I just want to, can you speak to the risk of a surge in electricity prices? And I know you, as a risk specialist, don't want to make big, bold claims about the future and make some prediction about electricity prices are going to 10x. But at the same time, I just want to kind of push you, because I do want you to accurately represent your views. And I kind of think, based on what you're saying, that it does create a risk of just an upward surge in electricity prices.
I would say that a surge in demand does not necessarily always mean a surge in prices, and does not always, because it depends also on the supply, and it depends on the grid stability and so on. What I would say though is that, you made, I would go back to a statement you made, which is for data centers and for large AI companies, the cost of electricity and energy is small in comparison to other costs. I would say the reality is that we don't know. We don't know if the cost of electricity is that small, because we still don't have like a complete report that says how much an algorithm consumes in terms of energy. Now, I was very careful to say we don't have a complete, because we do have some reporting. I think Google, to name a few, put out some reporting in the past weeks, and some other large, which has been. So which gives some transparency. Some other data providers and cloud providers put out some information here and there. But what I would say is, whilst we do have some projections, for example, from the grid themselves, I think PJM forecasts an increase in demand of 4% or 5% because of data centers, I think, if I recall correctly. We do not yet have a complete grasp of how much energy AI uses. So
Mhm.
maybe one company will disclose, but then do other company disclose? That's the question is, without knowing, it will be difficult for any person to answer your question, actually. But also, as I said, the equation has also supply and demand and stability of the power grid, and the stability of the infrastructure. I would just say one other thing is that most of our infrastructure has been built a long time ago. So its efficiency at every point of the transmission of power will be also something that will factor into this discussion. And we spoke a little bit about agriculture, but there are also metals in the equation, like copper is super important for the transmission of electricity. So uh, the AI demand is not the only factor, but we do not know yet exactly how much it is.
So there's a chance of a large growth in electricity demand from AI. And on the supply side, with renewables, the variability of that supply is a lot less certain. So it's a lot more confusing than it was back in the day when you were mainly fueling electricity and heating, and it was all supplied by coal. Like, that's a pretty simple model as a risk analyst. Whereas now you're introducing all these things that could make it just a lot more uncertain.
Yes, which is exactly what I'm saying is this is an opportunity for all the actors involved to rethink about, okay, is the system, and again, I'm not speaking about the US in particular, this is like, I think, more global than we think. Do we have the right operational model? Do we have the right safeguard, the right regulations? For example, the consultation I mentioned. I think this is the right time to ask some of these questions and have discussions with experts like engineers in the grid, but also the AI firm, etc. And then one final thing, because I am a software engineer as well, we shouldn't forget also that, at least in my days, there was a lot of focus on optimization and efficiency in the code. So maybe also there will be technological advances. That means that instead of needing extra GPUs, you will need less. Exactly. It's a very complex equation with a lot of factors. Some people will put forward one of them, some others will put another one. It will be a chain of conclusions without looking at the full picture, but also having data, which are very essential here as well to make that analysis.
I want to now ask you about green energy. So, renewables have been growing a lot faster in Europe than they have been in the United States. And with the current Trump administration turning back a lot of subsidies for green energy, it's raised a question of, is that going to slow the green transition? And I mean, there's a publicly traded European wind company that their share price is in free fall and is just down about 85% from its highs in January, for example. So like you, Iman, have heard for so long these arguments of green energy is going to take over the future and it is so efficient, and every year it's getting 50% cheaper and more efficient. Like natural gas is something of the past, but it seems like natural gas is quite cost effective, and a lot of these green energy build outs have been developed on subsidies that with their rollback, now it's challenging the profitability, at least looking at their profits and share prices. So, is there a little bit of overhype within the private sector of just how profitable and efficient and cost effective green energy is? I'm not referring to the political argument that we need to build out green energy to reduce carbon emissions to stop climate change. I'm not referring to that at all. I'm specifically referring to these private market actors who in 2016 were saying that with wind and solar, you're going to make so much money. And it kind of feels like that has not happened.
So I will try to decompose this into a risk reward by saying whether. So first of all, as you said, there were incentives for green energy, but when you look at the reward, there are many ways to look at it. There is the reward in terms of return on investment, but there is also in terms of energy security. As a power grid, how much dependencies do you have? Because you could say, yes, other types of energy were more stable and have a more stable, like more at least uh, forecastable revenue. But at the same time, the other side of it is um, how stable is the provision of power on electricity on average? How lower is the dependencies on like external imports or logistical costs? So I think it's a more nuanced equation there. And then on the other side, which is more on the risk side, is w- was the risk managed appropriately for those investments is also the question. Um, Again, um, is there is there something to do in terms of the hedging side of it? Is there something to do on the uh, kind of the regulation side, as we were discussing? So I do not know. I do not have an investment comment to make here, other than to say that um, it's a holistic picture, and we are in the starting of the grid becoming with a lot of renewable. So maybe there is a lot to look into Europe and see how the markets will evolve. I know I'm not answering exactly your questions because I do not have a good answer for it, to be honest. I will just give you an example maybe of Germany. And also, I would say the US is also complex because there are many states and many grids, and making this conclusion cohesively across all the grids in the United States is just not possible. But I will give you the example of Germany, where after Fukushima in Japan, after the horrible tsunami event and so on, and due to other reasons, Germany decided to switch off their nuclear capacity. So after France, Germany was the place where there were a lot of nuclear power plants, and they decided to switch them off and invest a lot in renewables and so on. Fast. So this was in 2011. Now we are 14 years after 2025. We had a pandemic, a horrible war in Europe, a lot of geopolitics, extreme weather events, and so on. So it would be interesting to do the analysis on Germany as a case study around the renewable of the grid and do the cost benefit analysis there, because we do have this concrete example.
Thank you, Amon. Tell us about Logarisk, the type of work you're doing, and the type of clients you are looking to work with.
Yeah, sure. Thank you for this. So Logarisk, I named it because, the logarithm function in math reduces exponential risks. So that's the idea. It's a consulting firm registered in England and based in London. And we aim to work with clients to help them resolve high expertise risk management problems, or also help them adapt to either new regulations or interpret regulatory feedback. We also offer board effectiveness and board reviews. And hopefully, I'm aiming to grow it also to be able to offer training solutions as well. So, yeah, that's it. And, after 25 years in the financial system, this is a new venture for me this year. So, we'll see where it goes.
Congratulations, Imane. People can find out more at logarisk.co. Thanks for watching. Remember to subscribe to the Monetary Matters YouTube channel and leave a rating and review on Apple Podcasts and Spotify. Until next time.
Thank you. Just close the door.